Welcome to Odds and Ends. I'm Dave Singh here with Rob Friesen. We're parsing through the StockOdds data to get trade ideas for the week ahead. We've just finished up the first quarter. We have S&P down about 5% and the NASDAQ down 9%. We just had our first day of trading in April. We have our turn of a month effect. We've got April historically strong. StockOdds says we're going to be a little bit stronger than historically. There is an inverted yield curve with the 2s and 10s. There's questions, is a recession ahead, right? We've got FOMC this week. The Ukraine situation still in play. So there's lots going on here. We've got April showers, May flowers, Fed powers, investor sorrows. What to do with all this, Rob?
That's good. You know, you missed your calling. You gotta take the stage, man. Take the stage. So yeah. Well, you know what bothers me? I'll tell you what bothers me. You want to hear what bothers me? Do you really, really want to hear what bothers me?
Just tell us.
You know, I just get a bad feeling about using so much of the strategic oil reserves, 180 million barrels, to bring the price down a little bit so that you can drive a little bit more. Like we don't want you driving your Jag all over California causing pollution anyway, right? So
10 miles an hour.
Yeah, we don't need people driving their Jags, okay? So it just bothers me. I thought strategic reserves are for real emergencies.
Yeah, like a true war. If the U.S. was at war with somebody, and
like, what happens if we deplete and then something else really bad happens? I don't know. It just I'm sorry, but I just have a sickening feeling about this. This is not good. But on the oil futures, it's certainly part of the reason that they're pulling back. And also other countries may, join with 30 to 50 million barrels as well. Part of the pulling back is also demand destruction because, as prices have been higher, you drive less, you may wrap a number of, things into the same day instead of, going out multiple days kind of thing. Okay. You make an adjustment, I think. But then there's the China thing. There's a significant lockdown underway, and so the demand destruction there is a concern. So anyway, you got my two thoughts on that. But oil remains in backwardation, which is normally bullish. It did decline from $2.99 difference per barrel in that backwardation down to about $1.52. So the spread has come down. So it's less of a backwardation, but it's still a bullish thing. So if you do see, I think here's a good clue. If you do see oil starting to claw back after a decline, maybe this week or maybe the next 2 weeks, I don't know, it keeps declining. But you start seeing it claw back. I think I'd probably go with that because commercial inventories are at the lowest level since 2014. Like, we still have serious problems with the supply chain. And if we start bouncing back, I definitely would not fight that. I mean, I don't have a problem right now, taking a few oil stocks short, whatever, let them kind of pull back, because we had a pretty good run, and we had a run since September on oil stocks. I mean, so yeah, we spiked on oil up to 140 a barrel on the Brent crude, and it's pulled back since. But I don't think the story is completely over yet. So keep posted on that. We are going into earnings season, April, right? So it's always a big month. It is one of the better performing months of the year. And, we go into earnings season. So it'll really be important what these companies have to say. Margins are already, pretty robust. And you saw last earnings season, even if they came out and, beat earnings, they got pummeled anyway. So I don't know if it'll be, the same this time around. But, you got to separate, the headline, what's it on earnings, what's it on revenues, what's it quarter over quarter, year over year. You kind of have to put all that together. And, often there's this anticipation of really good things, and then, it comes out and even one thing slightly wrong, and then they sell the stocks off. So it'll be interesting this earnings season, as it was last. And April ends the best 6 months of the year. So if this has been the best 6 months of the year so far, from November until April, what's the rest of the year hold?
Well, especially for small caps, right? We're expecting small caps.
Yeah, they didn't do very. They didn't do very well. I mean, the Russell did. No. It did pop up here just recently, and got above that channel that it was in, and then pulled back into the channel again. So, it's not done really. Last year the Russell didn't do very well, and then the only like incredible bright spot that we had was when it broke out of the channel in the beginning of November, right? That November 1st.
It was day one.
That was, you remember? And remember I picked all those nice Russell stocks for that day? I was like, what?
Got a month's worth of
I didn't expect to have that kind of performance on one day. But it's been kind of sad for the small caps. And I think it's just this whole thing about the expectations. Like the world was kind of riding on this sugar high, right? Mm-hmm. And the sugar high was that, companies that weren't making any money or had no earnings would eventually perform quite well, and they'd all be like Amazon, right? So many years without earnings, and then all of a sudden, woohoo, right?
What's the term?
We're all like Amazon, right?
What's the term they use? Pre-revenue.
Yeah. Well, I mean, it's no different than some of these electric vehicle companies too. They want to say we're like Tesla, right? So, whether they will be or not, that's the question. I don't know. I mean, I can't figure all that stuff out. But anyway, it's interesting. So, what are the groups that you see, like the ETFs, that will be pretty robust for the month of April, and the ones that will be underperforming? What do you see on that?
So I did a quick little study before our call here. April's expected to be up about 2.4%. I think historically it's up 1.7%, so a little bit more robust for the entire month. And the sectors that should outperform the spider, based on the stats, are the Qs, basic materials, XLC, energy, and consumer discretionary, XLY. And the underperformers are the small caps, IWM, financials, technology, industrials, consumer staples, real estate, utilities, and healthcare. So most of them seem to be underperforming. Just maybe basic materials, the Qs themselves, energy, and discretionary are outperforming the spider based on StockOdds data.
Mm-hmm. I think what this week, what will be the big event is the minutes, just because the last meeting was where they raised interest rates. So people are looking for what are the exact details here, what's the color on all this, and so that will be the big event this week. So you've got oil inventories will probably be meaningful, and then the FOMC, and we do have a lot of Fed speak during the week by different Fed participants. So there's quite a bit of banter, but I mean the minutes themselves will be the bigger event, right?
Yeah.
The minutes usually aren't as big as the actual Fed announcement day, but people are looking for more details, more color. So it can move the market. So don't underestimate it. And then that means that financials and REITs and utilities will also be possibly more in play with that too.
Uh-huh.
Now we're not really having much on the calendar. We got through the last day of the month, the first day of the new month, which was Friday. It also consumed our first Friday of the month. So we had the first trading day of the month and the first Friday of the month. We're expected to be down in April anyway, and Fridays are down in April, but it all kind of culminated in one day there. And then we don't really have much on the calendar till mid-month seasonality and then the third Friday of the month. Overall, with the performance that's possible for April, it doesn't reflect on those event days that much. So that means that in between the event days, like in between now and mid-month seasonality, we could move up, right? We have to allow for that, right?
Yeah, I have a question. What about tax day? Tax day falls in April. How much leading up to that do people sell in advance of that to generate funds? I mean, what about April 15th, right? Tax day.
Yeah, well, actually, are they due on the 18th this year, or?
Oh, maybe it's the 18th, but
yeah. So yeah, there is some seasonality to tax day. As far as selling, yeah, it's possible. I mean, I don't have the odds on that, that day in front of me. I have discussed this in the past, but I can't recall. So I'm sorry for that. I'm not prepared. Okay, let's just take a run here at what the futures are doing right now. We've got the Dow Futures are off just slightly, only 0.13%. Like we kind of opened at 6 p.m. Eastern time, and they popped up slightly, and then they just kind of been in a real dull sideways channel ever since, and slightly down. And then S&P same, minus 0.13. NASDAQ 100 minus 0.25, so a little bit worse. But you said for the month, NASDAQ 100, one of the better performers. So and the NASDAQ 100 has a lot of great technology stocks in it that people still want to buy on pullbacks. They don't want to miss the big picture, right? So they keep running that thing up. Russell 2000 is minus 0.15, so it's not as bad as the NASDAQ at the moment, but anyway, and the VIX is we're still in the 22.5 area. Anything over 20 is elevated volatility, in my opinion, and it causes markets to move both ways, right? Looking at the metals, we have seen, let's go on the daily here. Everything's pretty sideways, so far for the month of, or the last few weeks of March. Pretty sideways, nothing really much going on there. Let's see, and what's happening in the bond world right now? Let's see, we've got, well, you mentioned the inversions, but we've got the
10-year was up slightly earlier.
Yeah, it's down now. I mean, the bond itself is down, yields rising, right? So again, they're still seeming to factor in. We've had a bit of twists and turns on the 20-year TLT that we watch. It's the ETF that tracks the 20-year. We've had some twists and turns. We had a big slide on it down in March, which meant the yield was going up. Right towards the end of March and the beginning of April, it popped up a little bit. Let's see here, on Friday, it was quite a big range day on the TLT. It was way down and way back up again, closed a bit higher. So it's be interesting. We're seeming to have a little bit more volatility on it right now. So just be careful, allow for it to move, and that does affect some groups that you trade. If the TLT is selling off, that means yields are rising. That means that banks usually do better, REITs usually do better, insurance companies do better. And if it's headed in, if the TLT is heading up and yields are going down, that means that financials usually do worse, right? So this is something that we have a lot of confidence in. We use in our trading, and it does work. Okay.
I remember trading XLF and XLU in opposite directions too, just based on that 10-year. So
yeah, I mean that has been helpful for many, many years. You remember even when we had a bit of a group meeting, 10 years ago, we were talking about TLT and XLU, right? So yeah. What's changed? Some things don't change. So, all right, well, let's wrap it up and let you go and have a good evening, and we'll catch another day.
Sounds good. Good luck. Thanks.
Yeah. Cheers.